I do think you take the intervention question separately from the BOJ. What the BOJ does is going to be separate from any one-time intervention that the government may or may not decide to do. We don't have particular insights on whether or not the government will do intervention. We think it's entirely possible. But I do think it's important to separate that from what the BOJ is going to focus on doing tomorrow and in their monetary policy decisions, which is to support the Japanese economy and to make sure that the exit from deflation sustains itself. So we think that that's the focus of the BOJ and not so much the currency.
Does supporting the Japanese economy, does that rely on supporting the economy, does it rely on supporting the currency? Is the yen weakness so weak that, maybe we consider a surprise hike from the BOJ, for example, tomorrow? That would be one way to support the currency.
Yeah, no, absolutely. I think supporting the Japanese economy is going to entail primarily maintaining accommodative monetary policy conditions. So the BOJ, we know, is on a path towards normalizing interest rates or monetary policy. They had the mid-big meeting back in March to pull out of a lot of the extraordinary policies that they put in place, like negative interest rates and yield curve control, and they're on a path towards normalizing things. But they just want to make sure that they're doing that in a gradual fashion and not rush into things to tighten monetary conditions too much, to slow down this the momentum that we're seeing in the economy. And I think that that's their first priority, and addressing the situation on the FX market is at best secondary.
Who's in control of what is happening with the yen right now? Is it the BOJ, the Ministry of Finance, or is it the Federal Reserve in the United States?
Yeah, that's a great question. I think that the yen, the FX, ultimately is going to be driven by interest rate differentials. The government can come in and do intervention, and that'll move the market, for a little while. But that's not really going to be the determinant of FX. So longer term, as the Bank of Japan normalizes interest rates and interest rates go up in Japan, and as the Fed hopefully at some point starts to cut interest rates, the interest rate differential will start to normalize, and with that, the effects should begin to stabilize in turn.